Good afternoon then everyone, as we head into US trade on Wednesday the 8th of November, where there's not really a lot to speak about after this morning. After what we were talking about this morning, you see US stocks futures inch higher and run up to Powell's speech. Earlier on was in futures slightly lower in the lead up to Powell's speech. And as he's got going, he's kind of declining to comment on anything to do with monetary policy, and that it kind of goes with history. I mean, he's quite neutral in respect to kind of how he goes about things. There's always a caveat to what he says. He always says something, slightly pushes back on it, and he doesn't really want to spook markets too much. And just generally going back like through history, a few days after he's already shook up markets, probably doesn't want to do it again. And yeah, there's just that kind of event risk, I think, is out of the way. Now, there's another speech tomorrow, but again, that's likely to prove the same thing, which I think gives stocks maybe the green light to continue pushing higher, which they're making an attempt at as of now. There's not really much else apart from what we went through this morning as we flick through this. Analysts clipped their bullish Canadian dollar forecast as economy weakens. The Canadian dollar is set to strengthen less than previously expected over the coming year once a slowdown in domestic economy opens the door to the Bank of Canada interest rate cuts. A Reuters poll found, you can see when they're doing Reuters polls as the main sources of information on the headline feeds. That kind of tells you all that you need to know. Across the board, European equities have had a bit of a pop higher, which I think is interesting. I mean, retail sales down negative for a third month in a row. Markets have reacted positively to that. Further reaffirms the stance. You're not going to get any more interest rate hikes from the ECB. Markets have taken that as a positive. Although consumer spending being negative 3 months in a row is not good for business conditions. No more interest rate hikes are. So at the moment, we're in a kind of situation where bad news is good news for stock indexes. But if that bad news gets too bad, then that becomes a slight issue. But dollar strength across the board, equity market strong, not really something you see too much of, to be fair. But that is where we are at the moment. This Powell speech, he's speaking now, but declining to comment too much on monetary policy, so that's out of the way. No more high impact data over the course of today. Retail sales slightly worse than expected. European stocks push higher off the back of that. You can see this a pretty decent move across the DAX and the Euro stocks, as you can see post that release. That was the 10 o'clock candle. That was the 10 o'clock candle. Since we had that release, it's been a one-way train on each of these two stock indexes, which is interesting. US stocks making another attempt higher. The S&P having a go through the highs, the Dow Jones having a go through the highs. The Nasdaq isn't quite there, but still slight uptick, bit of a positive open, as you can see. Apart from the Russell's getting, I'll say whacked. I mean, sorry, getting whacked is it? But it's moving lower, but the S&P, the Dow Jones look like they want to have a go through the highs. And as I said earlier on in the week, not going to want to sell these. Bit of a pullback was due, got a bit of a pullback. I say a pullback, more of a sideways move than a pullback, but looking like it wants to go higher again. Euro dollar is failing at this support level, looking to kind of try and push a little bit higher, but ultimately it's pretty choppy since kind of 8-9 o'clock this morning. Overnight session a bit negative, but yeah, just choppy Aussie, Kiwi, choppy sterling, choppy dollar Swiss, dollar CAD, all choppy. Dollar yen continues to push higher. Our market's looking to test the Bank of Japan's resolve up again at 152. Remains to be seen, but ultimately they're kind of rattling through these charts, and you can see the picture across all of these. Yields not doing too much. Stocks already spoke about. I mean, oil had a little bit of an attempt lower. Further attempt lower, has bounced back. It's just kind of chopping around that 77, 76 region at the moment. Gold not doing too much either. So yeah, lack of direction at the moment. I say lack of direction, lack of action. I think the direction is clear. Stocks are, the S&P is through that high at the moment. I think long stocks is where you got to be, but I said that earlier. Do they go with much aggression? Maybe it remains to be seen, but there's a bit of positivity in markets at the moment. Interest rates looking like they have been concluded globally, or certainly across the G8. None of the central banks looking to hike anymore. And that seemingly is interest rate hikes done for this cycle. Next phase is interest rate cuts, which cuts are positive for stocks, but how the economy has to turn before you get cuts, not positive. So outlook, in my opinion, it's kind of somewhat cloudy, medium to long term, but ultimately in the short term, the direction is clear. Bullish stocks. Does that last forever? I can't imagine it does. Well, nothing lasts forever, but does it last for the foreseeable? I don't know. But for now, bullish stocks is what is going on at the moment. Whether you believe in it or not is a different question, but that's where the direction is. That's where markets are moving. That's where the sentiment is, and that's where you've got to. That's where you've got to point your direction. Higher stocks. Do they go again today? Do we get a bit more of a pullback? I'm not so sure, but the path is clear at the moment. Not a lot going on in other markets. Not a lot going on in any markets really, apart from the two stock indexes in Germany, to do with the fact that retail sales are lower. But economic data again, not a lot out the rest of the week. Not a lot out for the whole week. So prior trends, where you got to focus your attention, your cross-asset correlations, as this calendar ain't helping you out at all. But stocks higher in today's European session, today's US session, I mean, isn't the worst idea in the world, I don't think.